Before we get started with today's session, I'd like to inform everyone that we do have simultaneous translation available. Please check the bottom of your screen and click on the globe for interpretation services. You can select English or French, and this feature will allow you to hear the presentations in the language of your choice. Bon, avant de débuter la session aujourd'hui, j'aimerais vous informer que vous avez tous accès à la traduction simultanée. Veuillez vérifier le bas de votre écran et sélectionner le globe pour avoir accès à l'interprétation. Veuillez sélectionner l'anglais ou le français, English or French, puis cette fonction vous permettra d'entendre les présentations dans la langue de votre choix. So welcome back, everybody, to our fifth and our final day of the Asia Markets Forum. This week, we've had the opportunity to learn about key markets in Asia, namely Japan, South Korea, Vietnam, and Singapore. And I think we're beginning to understand why growing market demand makes for trade opportunities for Canadians. And in fact, in 2019, exports from this region, Atlantic Canada, soared to $1.25 billion. Of that, $233 million worth of goods were destined for the 4 ASEAN markets that we are going to be hearing about today. Speaking of which, we are broadcasting live today with John Evans and Uday Paniker, both with Tractus Asia. We had the pleasure of welcoming Uday the other day, and he talked to us and he gave us market strategy insights about Singapore. John Evans is the managing director of Tractus Asia, and he's advised on more than $5 billion US in trade and investment transactions across a wide variety of sectors. And Uday has been Tractus's Singapore country manager since March 2018, and previous to that was based in India doing business advisory services from 2011 to 2015. So today, both John and Uday will be discussing with us about tapping into opportunities in Southeast Asia with the spotlight on those 4 countries, Indonesia, Thailand, Malaysia, and Philippines, what we might call emerging ASEAN markets. And just a reminder, as in previous days, we'll always save time at the end of the presentations for a Q&A with our speakers. And then I would ask you to type in your questions at any time they may come up using the chat feature, and we will try to answer all of those at the end of our sessions. So Uday, I'll pass the virtual mic over to you, and we'll see you back after your presentations for our Q&A.
Perfect. Thank you, Suzanne, and wonderful to be here again. Thank you for giving us the opportunity to present our insights on these emerging markets. So I'll just share my screen. And start off with Indonesia. So before we get into that, just want to give a quick introduction to Tractus for those who are joining us new or fresh and haven't had the chance to join us for the webinars the previous days. So we're a management consulting firm that has been helping international businesses and also government agencies with their efforts into making inroads into Asia. And we have over 25 years of experience in this business advisory role, where we have assisted with over $8 billion worth of foreign direct investments into this part of the world. And we have our own team across 11 offices in Southeast Asia, China, India, and also representative in the US and Japan. And we are a team of 50, our consultants and analysts and country managers based across these offices. So we have a breadth of experience across various sectors from our private sector side, and we have a very strong economic development practice where we work with several Canadian provinces as well as other North American states and provinces and governments. So that's just a bit about us. I understand we'll be a bit short on time today, so might have to breeze through some of the content here. as we have John Evans, our director, speaking on Thailand and the Philippines after this. So just to quickly take you through ASEAN and the concept of ASEAN. So the Association of Southeast Asian Nations, it's a collection of 10 markets here in Southeast Asia, mainly Singapore, Thailand, Philippines, Brunei, Cambodia, Malaysia, Vietnam, and Indonesia and Myanmar. So together they form a sizable economic bloc, and they're one of the top 10 export markets for Canada. There's a population of about 650 million, so a lot of great target markets here for Canadian products. And there's annual consumer spending of over $2 trillion. So there is considerable purchasing power here as well, depending on which market you're looking at. I'll be speaking about Indonesia first, which is that country at the bottom, several islands here at the bottom in case you might not know. So we'll be focusing on that first, and then we'll look at Malaysia. So just going to the next slide. Indonesia is one of the fastest growing markets in ASEAN. It is also the biggest market in ASEAN with the highest number of people in this region. So compared to some of the other markets, say Singapore or Malaysia, Indonesia is, I would say, further behind in terms of its life cycle, and less developed, but growing really, really quickly. It has a population of almost 270 million people. So this is the most populous nation here. And it is actually $1 trillion economy. So not a lot of people really talk about it, but it's actually $1 trillion economy, which is a huge market. And in terms of GDP per capita, we're looking at about $6,000 Canadian per person. It is a very youthful market, so a large part of the population is very young. And over the recent years, they have significantly improved their ease of doing business ranking with the World Bank. So gone from rank number 128 to 91 based on various reforms that they have put in place over the past few years. They are one of the highest users of, or the most dense users of internet services. So technology is something that is quite growing at a very fast pace, and that specific sector is something that Canadian companies can also look at. But there are specific details about Indonesia that everybody should be aware of, especially from a cultural standpoint. It is an Islamic nation, so halal comes into place when you're looking at specific products, especially agri-foods related products. It is, language can be a barrier. So the main language is Bahasa Indonesia, and it is usually it can be a challenge for some companies that are addressing the market firsthand and might need some assistance on that front. Some of the main industries in Indonesia would be agriculture, food and beverage, textiles, automotive, electronics, and oil and gas. These are some of their main key areas of strength from an exports perspective. And it is also increasingly becoming a manufacturing hub for various international mega corporations. So something that Indonesia has improved upon recently, especially in the region where it is competing against the likes of Singapore and Thailand and Malaysia. In terms of the pandemic, unfortunately, at the moment, Indonesia is still trying to contain the issues that the pandemic has caused. It has a high rate of cases, so that has been something that the government has been trying to alleviate and drive the right kind of campaigns to make sure that people are masking up and ensuring that they are following social distancing. However, Indonesia is still open for business, and it is still continuing with its import and export obligations. So that has not stopped during this entire time. So it is something that you can look forward to from an export perspective. We looked at a few of the main export sectors of Atlantic Canada, so mainly seafood, ores, and mineral fuels. 2019 saw Indonesia import a lot of seafood and a lot of ores from the world, but from Canada back in 2019 it was mainly seafood, which was the main growth area for them in terms of bringing in Canadian products. So it grew year on year by 21% in 2019. And one of the challenges in Indonesia is getting good quality data. And as you can see, for 2020, it's been tough to get that data, and that is something that businesses do face when they go to Indonesia as well. But just to track back a bit, 2020 has been, I think, a tough year for everybody, and definitely exports have been hit from Canada to Indonesia. So I wanted to take everybody through a checklist of market entry tactics, and what to think of both for Indonesia and Malaysia. And there'll be some similarities given the similarities between the two countries culturally as well. But one of the first things to do is think about, have you understood whether this really promising market is something that your product fits, and whether you have thought about all the challenges that you might face there, and also, how promising is this market for you in the long term? So it is a critical idea to look at a market study, look at assessing the market for the opportunities in your specific sector in Indonesia, understand if there's a product market fit, and also the competition that you might face in Indonesia from local players as well as the others that are vying for the same piece of the pie. Could be Chinese imports, could be Japanese, and also other regional products that might be competing with you. And of course, looking at whether the right way to enter the market is through a partner or whether it's okay for you to go alone. And that depends entirely on how much knowledge of the market you have already and whether you've done business there before. So that takes me to the next part, which is a continuation of that research part that I had explained just now. Regulations is going to be something that you would really need to dig into when it comes to doing business in Indonesia. And it's a good idea to really get a proper understanding of this beforehand, before you embark on any kind of journey here. So imports into Indonesia come under the purview of the Directorate General of Customs and Excise. Indonesia is not part of the CPTPP, so you will have to look at your specific products and how much import duty would be there. But usually the average rate of import is about 7.5, and then there's a value-added tax of about 10%. Indonesia historically has had a protectionist attitude, and when it comes to trade specifically, and this sometimes is reflected in their regulations. And I would like to take seafood as an example. Seafood regulations they come under the purview of the Ministry of Marine Affairs and Fisheries, and recently they've passed regulations specifically around whether Indonesia has local supplies or not for specific seafood products. So if they do, then you might face challenges bringing in that specific kind of seafood into Indonesia. So they and then there are other similar kind of regulations that might be there which kind of reflect that protectionist attitude. But otherwise, if there is a need for Indonesia to import, say, lobsters, then that is something to check, and then go ahead with making your exports. There are other items that need to be addressed. Looking at certificate of origin, labeling in both Indonesian and Bahasa Indonesia and English, and you might face quarantine checks for imports and specific lab tests for seafood as well. Indonesia being a predominantly Muslim nation, halal is going to be something very important to look at. And there might be the case that you might need to look at halal certification all the way up your value chain or supply chain. This could be ingredients regarding specific food items, or other materials, raw materials that go into a product. So again, this ties back into the market research piece. If you have this kind of information beforehand, you've done your homework, then it makes it easier for you to address this particular item about halal certification. Importers who are based in Indonesia, who will bring your product in, they need to make sure that they have the right kind of business registration number, and also this just makes it that much more important to look for a partner in Indonesia who can deliver the goods for you, basically. So one of the third item on the checklist is vetting your partners. This is the traditional way to go into Indonesia. It helps from a language perspective, from a cultural perspective, and also understanding the ambiguity that is sometimes there in Indonesia's regulatory framework. So we always advise our clients to do your research in terms of who could be your potential partner in Indonesia, vet them, interview them, make sure you have a list of your critical items that you need to ensure that your partner in Indonesia has. This could be product knowledge. It could be having a proper understanding of the regulatory framework in that space, in your product space, or understanding what kind of relationships are needed on the ground regarding end clients. So someone who knows their way across the country. So Indonesia is also a large country, so you might have to look at whether you want one partner who is there just looking at, say, the city of Jakarta, which is the capital, or multiple partners that are covering all the islands of Indonesia and all the big cities. So vetting your partner is going to be critical. And finally, just looking at how you might want to set up in Indonesia if you're already there. The first thing is to make sure that you have understanding what your options are. So one would be direct sales. If you have already been doing some business there, you have some relationships and your products are being used, then and you're comfortable with the market, then you can set up your entity there, doing the work on your own. But if that has not been the case for you, and if you're new, then the best option is having channel partners who can take you into the market and basically be your eyes and ears on the ground and help you with sales there. And finally, you can always look at outsourcing your specific service to incubate your company there, hiring people directly on the ground to just kickstart your process in Indonesia. So that is another choice, which would be just an in-country presence, and that does depend on your appetite for risk. So it depends on looking at where you are in this path. These options depend on where on your path, where on your journey you are for Indonesia. Just a little bit on culture between Indonesia and Canada. You have Indonesia is just influenced by Asian cultures, various Asian cultures, and you see a lot of decision making, for example, being further higher up in companies. It'll be the seniors or the top leadership making decisions. Individualism is diametrically opposite to what we have in say North America or Europe, and Indonesians are also very comfortable with uncertainty. So they are. I would say it's a country where there's more relaxed decision making. Things might not be as quickly done as you might expect, but that is just part of the charm of the country. So in general, that is Indonesia. I would like to now go into Malaysia, another Muslim nation in the region, much smaller in terms of population, and but all very close by geographically. So just jumping on to Malaysia. Malaysia is, I would say, the second most developed market in Southeast Asia or ASEAN, behind Singapore. And it is, you had historically there were the Asian tiger economies, which would be Singapore, Hong Kong, Taiwan, and those countries developed really quickly, matured much faster. But Malaysia was slightly behind, so it's called an Asian cub economy. It is still far ahead in terms of its development, in terms of infrastructure, than say the Philippines or Vietnam and even Indonesia. So it is, but it is one of the fast-growing emerging markets here. It's an upper middle income market. It's actually ranked quite high in the World Bank's Ease of Doing Business ranking, which is 12th. And it is like I mentioned, it is a Muslim nation. So, there'll be cultural differences that you need to take care of when you are looking to do business here. It has been hit by the pandemic, like all the other countries, but it is expected to bounce back by about 6% in the next year, which is this year. So, in 2021. It is a destination of choice for various manufacturers in electronics, semiconductors, automotive engineering, as well as healthcare for specific healthcare-related equipment, medical equipment, especially things to do with rubber, as it is one of the world's largest producers of rubber. So things like medical gloves and other related items is something that Malaysia is very, very well known for. It is also, and this is going to be very interesting for a lot of the Atlantic Canadian seafood businesses, is that it's one of the largest consumers of seafood in all of Southeast Asia. So per capita consumption is about 60 kilos per year, and that is combined with a culture of eating out, and the fact that they have a higher disposable income than most of the other countries in the region. So it is a place to look for when it comes to seafood exports. Malaysia is also very strong in the petrochemical area. You might know the major Malaysian company Petronas, which is one of the biggest players in the world, and also in logging and palm oil. So those are some of their key sectors. Unfortunately, Malaysia is going through another rise in cases. In the middle, they had done well handling the pandemic, the rates of cases, but it's just gone through another rise, and they've announced another lockdown. So this has impacted business decisions, and everyone in Malaysia, several of our contacts and relations, and those of our clients are working from home. So decision making has been impacted. So that is something to keep in mind. From the standpoint of Atlantic Canada's top three sectors, in 2019, you saw mineral fuels being one of the top imports into Malaysia from Canada, and the previous year was hit pretty hard because of the pandemic. So going back into that same checklist. Malaysia is an up-and-coming economy, more developed than Indonesia, a lot more, but that should not preclude you from doing a proper assessment of your opportunities, depending on your product and industry and how much business you've already done there. So it is a good idea to look at what would be a good fit for your product in terms of the market, that you understand what you need to do from a cultural perspective. Will there be a lot of localization needed? So these are some of the items to think about. Malaysia is also, known for some unforeseen bureaucratic or regulatory hurdles that keep popping up. It has also been going through a bit of political turmoil, which has impacted a lot of business decision making, because people are unsure what the next regulatory updates or reforms are going to be, as they've just undergone a few changes in the government and their prime minister. So that has impacted international business and business decision making. So in terms of imports, the Malaysian customs is basically oversees all the goods that come into the country. Average tariff rates are about 6%, but Malaysia is part of the CPTPP. However, it hasn't ratified it yet. So once that is done, then Canadian businesses will benefit from the elimination of tariffs. In terms of other taxes, there is a sales and service tax for every product that comes in. So that this can range between 5 and 10%, depending on what your product is. So this kind of takes me back to the market assessment part that I mentioned. So this is information to research and understand beforehand. Lobsters, for example, has a sales tax of 10%, while wood pulp and paper products are fully exempt. So it's a good idea to check where you are in that scale. Again, touching on the halal part, it is a halal certification will be important for agri-food related products and other items as well. It is important to get that if you want to penetrate the market, given that the majority of the population in Malaysia is Muslim. Even though their society is made up of various different religions, Islam is still the majority. So halal will be important for most products. However, I should let everybody know that if you get halal certification that is accepted by or certified by the Malaysian authorities, then it's easier for you to actually sell that same product into Indonesia. So Malaysia's halal certification process is very well known within the Islamic market. So English is the main language in Malaysia, along with Bahasa Malay. But you still will need to vet your partners, make sure that um, they are able to deliver on the promises made to you, whether they have the knowledge of the market that you are trying to break into in Malaysia. But more importantly, Malaysia is it can be slow when it comes to decision making, and it always helps to have a person there on the ground who can help push certain decisions to be made. So some of the challenges that you can face there is, if you're looking at partnering with certain Malaysian local companies, there is a regulation called the Bumiputra Company, which is basically meant for local, to be owned by locals. And they come with specific regulations or rules that you need to follow if you're doing business with them, which can slow things down. Other challenges that some of our clients have faced or we have faced as well would be, communications being very slow, or people, not having the right experience to, delivering on certain things. So vetting your partners will be very key, and that's going to be, done through your process of understanding what is important to you, and then making sure that that whoever you're speaking with in Malaysia is kind of meets those criteria. In terms of setting up there, similar to Indonesia, you can either go it alone and start your pushing your product there, making relationships and making some sales, and then building it from there. Or traditionally getting your partner who has the right relationships and can push your product and promote that within the market, can give you the guidance you need when it comes to regulations. And finally, if you want, you can always dive in first and set up in Malaysia, hire a local, and then start building out from there. So that's the basic market entry checklist that I've basically gone through for both Indonesia and Malaysia, and you'll hear that soon again from my director, John, as well. It's the basics, it's the important stuff. So, are you ready to export? That's the first question. Have you done your research on the market? Does it really provide you the opportunities that you're looking for? Is it lucrative enough for you in the long term? Do you understand the regulatory aspect? And then finally, should you go in with a partner that you've vetted, or do you want to choose another option? So that's basically it from my side. From a cultural perspective, of course, similar to Indonesia, there is, decision making is all the way at the top of the chain, and it can be slow in Malaysia because of that aspect, and there is they're more leaning towards, Malaysians lean more towards a long-term kind of relationship and a long-term perspective when it comes to doing business with anybody. So something to think about. And yes, just some final few pieces. It's good to look at these markets to diversify, assess your opportunities, vet your partners, and keep an eye out on what is actually going on in ASEAN during this time, because things are changing very quickly. So I will now leave it to John to cover Thailand and the Philippines, and then at the end of that, we can take all your questions. Thank you. John, the floor is yours.
I'm here. I'm just trying to share my screen. Please let me know when it comes up.
Yep, it's up.
Okay, great. So welcome everyone, and I'm delighted to be here today. I know that you've had a busy week talking about export opportunities into Asia, and so one of the things that I wanted to do today was maybe take a little bit different tact, because if you've been listening to us speak this week, you've seen some of the same slides, and I'm gonna have the same slides, but I'm gonna talk about some other things. So today we're talking about ASEAN, and ASEAN, the Association of Southeast Asian nations, is 10 countries. And I think yesterday you heard the other co-founder and my business partner Dennis talk about Vietnam, which is one of the emerging markets, and a very exciting market. Uday previously talked about Singapore, the most sort of developed economy in the world in a lot of different rankings. And then today, talking about Malaysia and Indonesia, and as Uday said, arguably Malaysia is the second most developed country in the region, but quite a bit still behind Singapore. And then Indonesia is an emerging country. I've been tasked with talking with Thailand and the Philippines, and I'll get to those in a minute. But the other thing that we need to be thinking about from ASEAN is there are a number of other countries, and I'm going to sort of go in reverse development order. Myanmar, Laos are the least developed. Myanmar needs everything. And so there are trade opportunities in Myanmar as that economy comes back. It's as a really just recently opened country. There's a lot of risk reward there. So pioneers that want to do business there can take advantage of it, but they can also be burned. Laos and Cambodia, the next two countries, have lots and lots of Chinese influence. The Chinese have done a great job of inculcating themselves into the economies there, and that can be both an opportunity and a challenge to compete there. And then the other country that we haven't really talked about, Brunei, is a small kingdom, heavily reliant on its oil reserves, and very small population, but extremely wealthy. And that brings us to Thailand and the Philippines. And I have spent most of my career here. I started in Asia in 1992, and when I started consulting in 1995, one of the things that was interesting is that I was spending time in both Thailand and the Philippines. And at that point, Thailand and the Philippines were really economically equal. And in terms of their development of infrastructure, equal. And one of the things that has happened is Thailand has developed much faster. And I'll talk now about Thailand and get into what is occurring in Thailand here. Just give me a second. My screen is not responding to me. So I need to make one change. Okay, I'm not going to talk about myself, of course, in Tractus, because you've probably heard that multiple times. What I am going to do is I'm going to talk about Thailand, the place that we started our business, and where I do call home. I also spent 12 years in China in between my two stints here. So I'm having some tough technical difficulties. So the first thing about Thailand, I think to think about is how has it endured COVID? And Thailand, if you look at the graph there, Thailand for 7 months had no COVID cases, other than a few people arriving in quarantine. In the last month plus now, since December, there was an outbreak at one of the nation's largest seafood markets. And this is where seafood comes in from local fishermen. And there were fishermen that were infected. And what was interesting is immediately COVID has had a second wave. And the initial wave was only about 2,500 people in total, and it was managed extremely well. We've now had about 15,000 cases in 6 weeks. And this graph makes it look like it's going crazy, but the reality is after 6 weeks of lockdown, or I would say 4.5, it's back under control, and the numbers are going down now rapidly. And I think that's a great example of Thailand's public healthcare system and its technocrats that make decisions, and they've done a reasonable good job of managing it, which creates then economic opportunities. Thailand itself is a very balanced economy. If you look at this, you could say, well, it doesn't look that balanced because agriculture is quite small. The services side has been growing, but agriculture is a main business here, both from a commodity standpoint and food processing. And the services are some of that component of that 58%, somewhere between 20 and 30%, depending on who you look at, is tourism. Tourism has really been hit hard this year, as you could expect. And so that has brought the Thai economy down. It's brought overall wage rates down. It's really depressed what has been a pretty rapidly going economy. And until we see the tourism rebound, that's going to continue to be the same. But what that's done is it's created an environment where there's a little bit more competitiveness now. Thailand has thought of itself as sort of the leading manufacturing country in ASEAN. Its wage rates were, getting on par with Malaysia, although its productivity was a lot higher in a lot of sectors. And now, that's coming down. Wage rates are not increasing as much, and there's some opportunities. Of course, less wages is contributing to less consumer spending as people are worried, and that particularly, as I said earlier, was impacted by tourism. The forecast this year is to be about 3% growth. It's historically been at about 5%. This year, of course, it was negative. It's a pretty easy place to do business. And one of the Atlantic Canada's big exports being seafood. It is a place that does a lot of seafood, both from the region and from around the world. And I think one of the things that a lot of people don't know about Thailand is Thailand. I think most people know it's a food hub. As I mentioned, commodity food processing. It's really they have a saying here. It's the kitchen of the world. And anyone who likes Thai food will sort of understand that. But it also is a major exporter. But with those exports come imports for processing, and a foodie culture that's been created now in the capital of Bangkok that really could rival anywhere. There are as many Michelin restaurants now in Thailand, centered in Bangkok, as any city in the world, if you can believe that. And there is a culture of buying high-end foods, whether that would be, a Canadian beef or Canadian lobster, or other Canadian seafood, and pleasing the palate of that developing food culture here. Here are some examples of some of the imports and exports. I'm not going to go through them. I think the most important thing to take away from this is that exports were 249 billion, imports were 251 billion. So sort of a net balance. Again, another part of this balanced economy, which is very strong. There was just under $1 billion imported from Canada. The two things that are the highest, gold. Many people don't know, but Thailand is important for gold in two ways. One, it is a very large jewelry manufacturing hub. For many years, it was the largest in the world, and then it was overtaken by India. The other thing that it does with gold is that gold is a way to wear your wealth. And so when the economy is tough, people invest in gold as a hedge for the economy. And then the wood fiber is really being driven by the paper industry here. That is, the manufacturing is quite strong. So if you look at the numbers from 2019 on exports from Canada, they aren't all that exciting. A lot of the numbers are in the red, a lot of them are down. Mineral fuels went up, and then seafoods went up a little bit. I think some of these, with a focus on Thailand, particularly now, could rebound. But the recent trade has certainly been negative from Canada to Thailand. So understanding market entry. Uday's talked about assessing, the business case, assessing partners, vetting them. I'm not going to get into that because that holds true in any market. But what you do need to really do is make sure that your product or technology, that there is an opportunity for it, and that there's not a prohibitive regulatory regime or tax regime before you come in. You also need to make sure that you're looking at licensing and trademarking. And those are some of the things that you need to carefully look at after you've determined if your product or technology is the fit. The regulatory environment is pretty straightforward. It can be navigated relatively easily, except for the language difficulties. And the technocrats that run most of the ministries are pretty good to deal with. The one exception historically has been customs, where there has, of course, been some corruption, but that has actually changed quite a bit, and that's getting better and better. And more things are going online, and they're becoming automated, and that is decreasing that corruption. The corruption historically in Thailand is created from how the economy and the politics are structured. As a constitutional monarchy, it's really, in my opinion, the last modern feudal system of any size. So it's a large functioning economy that works in a feudal system, and it has been successful at doing that forever. And part of the way a feudal system works, as many of you would know, is patronage, and that's really where that concept of what we may in the West call corruption came, where here patronage and royalties go both directions. The royalties go up, the patronage goes down, and things get paid off. And so that culture is changing, but what they have done is they've institutionalized it, much like the West, where there are fees that are now not considered corruption. And so, like I said, it can be a relatively easy place to deal with. Language barriers are certainly here. On the other side, there is a large expatriate community from the Western side, Canadians, Americans, Europeans. There are plenty of Thais that speak English well, particularly in Bangkok. And so while it's a documentation barrier, it can be quite easy to navigate through hiring the right people. One of the things that is really important to know is there are restrictions on foreign businesses, and that's done through the Foreign Business Act. And while it looks very onerous when you first read it, and it curtails investors owning more than 50% in a number of industrial sectors, there are also ways to get around it by applying for Board of Investment Promotion, and being able to utilize some other structures here that are accepted. And that's really if you were thinking about making an investment. But it's important because when you're selling into the country, there are things that are precluded from selling. I've listed some of these here. And then there's a second list, which you can't engage in because of whether other cultural issues or resource protection or national security, and you would need a partner to actually work with in the market. And then the third list is a list basically based on competitiveness, but you're not really precluded in most of these. Every one of these types of business segments are things that foreigners are working in, they are doing business in, and there are structures that allow you to do that. So while that looks pretty daunting, it can be navigated pretty efficiently. There are some exceptions to it. I'm not going to read through these, but certain levels of investment. And as I mentioned earlier, the Board of Investment is very, very pro-foreign business. You've heard about selecting your partners. I think that the thing to talk about for this is, direct sales. You can export, you can do it alone. It's hard to grow the business. Using an e-commerce platform, the e-commerce platforms, Shopee, Lazada, Amazon are all here. They're relatively easy to deal with, and they're growing very, very rapidly. Channel partners, agents, or distributors, a very accomplished group of potential partners for that. And again, sophisticated business people, so you can find the right partners. And then setting up here, despite the Foreign Business Act restrictions, is relatively painless, and you can get set up if you wanted to have an in-country presence. Looking at the cultural comparisons, similar to some of the countries that Uday just talked about, the power dynamic of decision making versus consensus. It's top-down decision making here. The next one, individualism. I actually think that this is rated incorrectly. Thais are entrepreneurs. They're individual. I think that this comes from the fact that they are in this constitutional monarchy. But Thais are free thinkers. And so there was a survey done by one of the leading advertising firms, I think it was Ogilvy and Mather, and 78% of Thais wanted to own their own business. And so getting back to working and finding somebody to represent you or trade with you, that's pretty easy. Masculinity, it's a very open society for gender and sexual orientation. It's very fluid. Uncertainty avoidance, one of the things that's really important about Thais is they avoid conflict. They don't want conflict at all. They will avoid it at any chance, and that can make things sometimes hard to do business, but there are ways to deal with that. They're not that long-term and oriented compared to other places, but similar to Canada, and not very indulgent. Uday's covered the basic market checklist. I'm going to skip that, and I'm going to go right into the Philippines with time considerations. Philippines has really struggled in the beginning of COVID. And it wasn't until just recently that they've gotten a handle on it. So the economy was really decimated. And it's just probably in the last couple months where you're seeing free movement in the country and a forecast recovery, which is good. Again, comparing Thailand and the Philippines, excuse me, from an industry perspective, services really dominate. It's not a manufacturing hub. There is, of course, some manufacturing, some electronics there, some mining. Shipbuilding is one of the stronger ones. And in addition to that, there has been some relocation of mainly North American investors in China that were hit by the U.S.-China trade tariffs and have relocated to the Philippines. There's a good technical supply of workers. English is the national language. And that's what really propels the business process outsourcing in the back office shared services. Tourism is also a major portion of this, but they're not dependent on tourism like a Thailand is. I think one of the interesting things is that we all probably know in our home province that Filipinos that are working there. One of the largest exports of the Philippines is its people, and its sort of best and brightest have been working overseas and repatriating money to their families to take care of them, and they've been doing that for decades. What is interesting now is that many of the people that have been doing that, in all corners of the globe, have made money. They've been working in Western economies, and they've saved a lot. And they're going back. They're going back to the Philippines, and they're becoming entrepreneurial in their outlook. They're setting up small shops and restaurants and outlets, and they're importing goods. And this is really a new phenomenon. And it's something that hasn't happened until about the last 10 years, and even more so in the last 5 years. And another thing about the Philippines economy that I said earlier, Thailand sort of took off and grew. Thailand's about 200 billion larger in GDP. The Philippines didn't invest in its infrastructure. And I mentioned that they were equal when I first started my career here in terms of the size of the economy and what happened. But the Thais had a group of technocrats that went and really put in a plan for the growth. And that was supported by the large families that dominate business. In the Philippines, the large families that dominate the business didn't really work in collaboration with the government to build some of that infrastructure. They, of course, collaborated with the government to make money, but they haven't built some of the infrastructure that they need. And it's particularly daunting from a road perspective is the Philippines, of course, is a group of islands and archipelago, and going across each of those islands can be really difficult, and then going from one to the other, they just don't have the infrastructure to ship goods. With all that said, the forecasts are for the Philippines to be quite strong in its GDP growth this year. It is being viewed in ASEAN as a alternative to more developed countries like Malaysia or Thailand. The ease of business, due mainly to the corruption I commented about earlier, it is a lot lower ranking than some of its other ASEAN neighbors, but that's balanced a little bit by the ability to do business in English. The other thing is the Filipinos themselves have a very much a love of North American foods, North American culture. They are very aligned with it, and that makes it an easy place to work from that perspective. The food processing sector is growing rapidly, while the Philippines itself has not become sort of a breadbasket of the region. We are seeing many more processing of foods and seafoods going on there, and I think that will continue. Again, I won't go through these in detail, but I think if you look at the difference here, 67.5 billion in goods exported versus 115 billion of net imports. So it has been for a long time a net importer. It is forecast to continue to be a net importer, which of course creates opportunities for Canada. And then when you look at it, comparing Thailand and the Philippines, Canadian exports are not that far beyond Thailand, a much bigger economy. Most of that has been driven by the purchase of Canadian aerospace. And so, those types of products with those high values will drive that, but will continue to be part of the economy as they build out that infrastructure, both for air, which of course is going to slow down a little bit, but some plans potentially for trains, high-speed trains that Canada could also participate in. Looking at the sectors, there are a number of negative growth numbers here, but there are also more positive growth numbers in seafood, in ores, in mineral fuels are showing growth and have continued to as exports from Canada to the Philippines. So, as Uday said, and I've echoed, you need to be careful. You need to look at if the Philippines is a fit for your product. I think determining whether it's a fit for your product is the easier part. Determining who you want to work with and getting the products in is the harder part. Despite English, the regulatory environment can be pretty daunting because of the corruption that is there in the Philippines yet. And so you really need assistance on navigating this, whether that's your freight forwarders, whether it's your legal counsel, whether it's a consultant. You need advice on this because there's a big potential risk of bringing products in and getting them hung up when they come in. The partners, I talked earlier about the big families. There are about 10 major Philippine families that are very successful and have dominated the business. They're fantastic partners, but they also have a lot of leverage when you're dealing with them because of their size and their scope of business. Historically, there haven't been a lot of mid-sized companies. Those are now starting to develop, and there are a tremendous number of small entrepreneurs. But the risk with the small entrepreneurs is, do they have the financial wherewithal to be able to, to import and promote your goods appropriately? One of the things I mentioned earlier is this returning Philippine diaspora. They are becoming an increasingly good choice for bringing products in and assisting you to distribute in the Philippines. I don't think I'm going to cover this. We've covered it in every talk that we've had about the options on how to set up. the Philippines, you can do all of these, and you can get set up and do business. There are very few restrictions, unlike Thailand, on what you can do. It's much less, and so coming in and doing business here, whether you set up your own entity or work with a partner, is very viable. The Philippines, the power dynamics. If you think about this, this goes back to what I was talking about. Very few people making decisions, very few companies driving those decisions. Individualism is not that high. That's very accurate. It's a very masculine, machismo society. The Catholic Spanish influence pervades that the culture. Very similar in terms of uncertainty and avoidance with Canada. Very short-term oriented in their outlooks. A lot of that has to do with the lack of a really large middle class. It's mostly lower class, and then in indulgence is lower than Canada. The picture on the bottom right is something called tinkling, which is a national dance, and they take bamboo and they bang it together and you dance, and it's competitive. And we highlighted that because one of the things is that the Filipinos are competitive in their sports. They want to succeed at things, and showing that one of their major national dances is actually a competition, I think is a good description of how they think about trying to compete with not only in a business sense, but just to get ahead. So checklist 2 days covered that. I think it's probably a good time to open it up to questions.
Thank you so much, John. Thank you, Uday. So Suzanne back here. There are a few questions that have come in through the chat. So I think what we'll do is we'll kick off with those. And I've got a few of my own if we still have some time. And so my good colleague Daryl from PEI is curious. So what is the regulatory landscape like, if you know, specifically in the biosector today in Indonesia? Do you have some insights there?
I think in one word, the best way to describe it is it's a bit gray. The Indonesian Biosafety Commission is what really the organization that looks out at incoming biotech related, whether it's GMO crops and other items. But for the large part of this decade, they were inactive for a while. I think while there was, the change in the government and elections, which had slowed down some of their reforms and new regulations that they want to come out with. So the best thing to do is keep an eye out on what the Biosafety Commission is going to come out with in terms of their new regulations regarding different products. Also, another note, in terms of enforcement of certain laws, it's lax in Indonesia. I had not really touched upon this in detail during my session, but like in some of the other emerging markets here, corruption is an issue. In Indonesia, slow-moving reforms and decision-making is an issue, and this all impacts, the sectors like biotech, where you need proper enforcement of IP laws. You need, the right kind of reforms made to remove certain protectionist measures that, block biotech products coming in, such as GMO crops, for example. So yeah, that's the answer I can give at the moment. The best thing to do is keep an eye out on what the Indonesian government is doing from biosafety and biotech perspective.
Yeah, that's great. Thanks, Uday. A couple of questions, John, regarding Thailand and the Philippines in particular. So are you aware in Thailand and or the Philippines of any major trade events that might be happening in the foreseeable future? We've heard for some of the other markets that very small in-person events are being orchestrated, but a lot of it is still hybrid or virtual. But give us an indication if there's anything big coming up that we ought to be paying attention to or consider participating in.
Yeah, so both of the countries have sort of backburnered all their events. And the Philippines has been very cautious about announcing anything because it's taken them a long time to get COVID under control. Thailand was moving very quickly to look at how to liberalize until this last outbreak. And I think Thailand has a number of trade events that are scheduled in the second half of the year that haven't been canceled yet. And um, they announced 2 days ago that starting July 1, anyone who has been vaccinated will be able to come to the country. So I would expect that we will see trade shows probably not in the third quarter, but in the fourth quarter, coming back in Thailand.
Okay.
And part of that is they're so dependent on, tourism, and I mean the MICE sector is huge here, and so bringing in exhibitions and trade shows is something that they're really focused on doing. But they won't do it unless if they don't believe it's safe.
Okay, that's great insight. And so we can pay attention to what's going on in Thailand with respect to some major international fairs. About the Philippines, John, did you say that import licenses are required?
Yeah, it depends on what you're bringing in. I had a slide in there that people can look at it, but animal products, fishery aquatics, wood products, minerals, they all need licenses. Anything on food related has to have approval. Anything medical, drug related needs to have approval, a license.
Yeah, good. And just to remind folks, we are posting all the presentations so people can view those at any time, and we're keeping the event platform open for conceivably several months. So good handy reference points to refer back to the decks. So my colleague Max in Nova Scotia probably has the concluding question, the one that was going through my mind. Question to the two of you. With everything that we've learned this week, we've talked about, again, Japan and South Korea and Vietnam and Singapore, and now these four, mind you, spotlights on 4 other ASEAN countries. So let's rank them. Let's rank them in terms of opportunities for Atlantic Canadian SMEs who presumably will have a great quality niche product or service. Where do we go first? Where do we go second? And, where should we maybe backburn some of the other markets, if you will?
Yeah, well, I'll start, and then we'll see if Uday agrees. I think in terms of the developed markets for the types of products that are being produced in New Brunswick, Singapore's a great starting point. And, the volumes are going to be smaller, but the sophistication of the market, the ability to spend on higher value products is there. I think the next two, and I think they're very equal in terms of buying power and being able to navigate, and it will really depend on what you're selling, would be Thailand and Malaysia. I think that those two offer, again, a developed market that's used to bringing in higher value goods. I think the emerging market of Vietnam that Dennis spoke about yesterday is one that's growing so quickly that there's certainly some opportunities there. And I think that, to me, the sleeper in ASEAN is the Philippines. And I think once they're growing faster in the last few years, with the exception, of course, of the COVID interruption, than a lot of other places. So for ASEAN, that's how I would rank them.
And Uday, what's your ranking?
So I think
if
John's
you're on the
pretty
same
much.
page as your boss.
No, it's okay. I can disagree with John a little bit now. Actually, I do echo most of his ranking, and it's a great question because this kind of ranking and analysis is what we do for a lot of our clients. And one caveat I would add is, like John mentioned, it does depend on what you're bringing in and what you want to export to this part of the world. I would rank in terms of prioritization the same way as John has. The only thing is I would probably put Indonesia as the dark horse market. It's a challenging market, but if you can crack it, you've got a long-term market with a massive market size of 270 million people. So that would be, I would say the dark horse entrant into the race in that ranking, and I would probably put that a bit higher than the Philippines. So it would go Singapore, Thailand, Malaysia, Indonesia for me, and then the Philippines at the end. But that's just my opinion.
Your opinion matters. Thank you, John.
I was just going to comment. I think Uday's the addition of Indonesia. If you have a consumer good and you can crack that market, you can do really, really well. But it is a hard one. And we're specifically referencing ASEAN, but I think you don't want to forget the markets that we talked about earlier in the week, Japan and Korea. I mean, Japan and Korea's sophisticated economies with their purchasing power, dwarf the ASEAN countries for the most part. So, you want to keep those in mind.
Correct.
Thank you, gentlemen. And again, for spending Friday evening with us, your time. And Uday, again, a big special thanks for coordinating the week sessions for us with your team. John, we're delighted that you were able to join us as well. So we'll finish off this morning's session with that. I know that there were more questions, and so probably what we'll do is we'll go through the questions and just kind of respond to folks by email. There's some pretty good questions. Anyway, it's hard to believe this is the end of our 5-day Asia Markets Forum, and we have learned so much from you and your team, and from the 7 trade commissioners also that joined us throughout the week. Just a reminder then, and I've already said, the platform stays open. The research, the sources of intelligence, the presentations, the bios of all of our speakers, we had 12 in total. They're all posted online with their information on how to connect with each of them directly. And I do encourage all of our guests to do that if they have some additional questions. Finally, I would like to acknowledge fabulous support, stellar event management services offered by Sarah and her team at Host Event Management. The dedication and efforts of my own team here at OMB behind the scenes, putting together the content and trying to develop a robust program for you. And finally, the support of our colleagues across the region from Nova Scotia, Newfoundland, Prince Edward Island, Global Affairs Canada, ACOA, without whom this forum certainly would not have been made possible. And we acknowledge our funding support under the Atlantic Trade Investment Growth Strategy. Alors, je vous souhaite une très bonne journée. Thank you again to everybody. Have a wonderful day, wonderful weekend, and please stay safe. Bye-bye for now.
Thank you, Suzanne. Bye-bye.
Thank you, everybody. Thank you, Suzanne.
My pleasure.